Good morning, good morning, good morning. Welcome to today's Morning Blast. It is Thursday, the 10th of July, all day. You join myself and Mr. Michael Brown where we
What?
give you a review of yesterday, a preview of today, put a smile on your face, offer a bit of value, yada, yada, yada. But before we do, I'll get the legals out the way. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. How are you, Mr. Michael Brown? You're muted. Hello? Mr. Michael Brown.
No, morning.
Oh, you there then?
Now,
Decided to
yes,
turn
I was
up.
very distracted reading someone else's email.
Okay. Okay. All right. I'll let you off. What's been
Well,
occurring?
you're going to have to. You don't get a choice.
Very true.
All right, fuck off, and then you're really in the lurch. So
Very, very true. Take as long as you want, mate.
I'll go and get myself a coffee then.
What's been happening?
Right, what has been happening? Very good morning to everybody. Let's start with the issue of trade once again, because markets are just sort of meandering about in
Yeah.
relatively directionless fashion, to be honest with you. A few upticks in the equity complex yesterday. Some fairly notable weakness coming through in the Brazilian real, which is obviously really bad news for the folk down in
Oh,
Brazil.
God. Oh, no. Oh, no.
Sorry, that was terrible,
That
I
was
will admit.
terrible.
But other than that, there really isn't too much going on in terms of market moves. It's been a pretty subdued week so far. Anyway, as for those trade headlines, President Trump sending another round of tariff letters out yesterday. The market continuing to really believe that these are just a negotiating gambit and that
Yeah.
these tariffs probably don't come into effect. The one country that I would flag, though, and I did just allude to them, is Brazil. Trump has thrown a 50% tariff on Brazilian imports to the United States, and I think this could be a little bit harder for them to get out of than some other countries,
Yeah.
because this seems, frankly, very, very politically motivated. I'm not entirely sure on the situation in the ground in Brazil, but it seems that Trump has, for whatever reason, taken umbrage at the fact that former president and his best friend Bolsonaro is being investigated / prosecuted for various things, and as a result has decided to put a 50% tariff in place. And actually, I think it says a lot that all of the tariff letters so far have been very much a template and a carbon copy of each other, to the point where one of them started with Mr. President and then said Her Majesty in it, which was, quite frankly bizarre. The Brazil one was completely different. I would say actually go and read it because he's just ranting away about all sorts. So it could be harder for them to get out of that 50% levy. But I think for the others, it is very much a case of fine, throw out whatever number you want, but we're 3 weeks away from when they would have to go into effect, escalate to de-escalate, etc., etc.,
Exactly that.
What I don't think will please President Trump is his trade advisor, Peter Navarro, going on TV yesterday on Fox Business saying, and I quote, "Markets understand that these trade letters are all about negotiations." Very much saying the quiet part out loud there,
Yeah.
Mr. Navarro, which thank you very much, because it endorses the view that myself and Ryan have had for some time now. But I doubt the orange chap in the Oval Office is as pleased that you've walked all
Don't
over
tell
his
him that.
negotiating strategy like that. The other couple of bits of trade news that we've had, obviously, Trump conferring that 50% tariff on copper that will come into place on the 1st of August. Again, whether that does or not remains to be seen. And we have had reports this morning via Bloomberg citing sources when it comes to the potential US-India trade deal that a team of Indian negotiators is likely to travel to the United States, quote, soon for trade talks. And those talks will be on both an interim deal and a potential broader free trade agreement. Away from the issue of trade, a few other catalysts worth bearing in mind from yesterday. We did have the release of minutes from the June FOMC meeting. Absolutely nothing by way of surprise in these minutes. Most participants seeing the risk of a persistent tariff impact on inflation. The majority of participants seeing slower economic growth moving forward, and many participants expecting a gradual softening of labour conditions. This pretty much reflective of the updated SEP. that they issued at the June meeting, just a sort of more anecdotal version of the quantitative commentary that they put out previously. The minutes also flagging that a couple of participants would be open to a rate reduction at the next meeting. Well, we obviously know that that is Bowman and Waller, because they have made public statements to that effect in recent weeks. So absolutely no surprises there. We had a 10-year sale in the States yesterday, which went relatively well, stopping through the when issued by 0.3 basis points, calming a few nerves ahead of the 30-year auction later on today. Here in the UK, quite a lot of news yesterday, actually. The first coming from the Bank of England Governor, Andrew Bailey, saying that there is an open discussion and decision around quantitative tightening. Of course, the BOE conducting QT at a much faster pace than their G10 peers. They're one of, if not the only G10 central bank, actually, that is conducting active portfolio sales. They are actively auctioning off their gilt holdings on a weekly basis. They review this process every September anyway, and given some of the stresses that we've seen in the gilt market of late, it would not be at all surprising if they brought that process of active sales to a conclusion. The one other thing that's important to bear in mind with this is that because the UK is a bit of a weird nation when it comes to the link between monetary and fiscal policy, what the BOE do in terms of QT has a huge impact on the Chancellor, Rachel Reeves, because the Treasury have indemnified the BOE against losses on their bond holdings. So if the OBR, sorry to throw another acronym out there, if they model that those losses on QT are going to be much lower over the forecast horizon, that would actually give Rachel Reeves more fiscal headroom and make that, to coin her term, black hole that needs to be closed quite a lot smaller. So it sounds like a technical decision, QT, is it going to continue, is it not? In normal times, I'd say it is a purely technical decision, but because of the way we've decided to engineer the UK economy, it could actually have quite a significant impact on the broader fiscal policy landscape as we move into the autumn.
Good
so
knowledge.
certainly want to
Good bit
keep
of
an
added
eye on
value
them.
there.
Thank you, mate.
Love that.
That makes up for my lateness this morning.
Mate, you made up for it with your Real joke, to be fair.
It was just royally good, wasn't it?
Oh, God. Oh, no, what have I done? Oh, God.
Sticking with the UK and our esteemed Chancellor Rachel Reeves, the FT reporting that she is going to launch a permanent mortgage guarantee scheme. This will see the government guaranteeing mortgages that banks issue with LTVs as high as 95%. Basically, lenders pay the Treasury a fee to take advantage of the guarantee, which supposedly means that they're happier to lend to what would otherwise be perceived as riskier borrowers. Frankly, this speaks to, and I know I'm now long housing, so, I'm a little bit biased here, but it speaks to the UK's general strategy with housing, which is we have a massive housing supply problem here in the UK, particularly in the southeast and in London. But we're trying to solve that problem with demand-led solutions, which is bizarre, but that we seem to do anything other than actually build houses here in the UK, and this is another example of that. Moving on, but staying here in the UK. Sky News, they reported two things yesterday. The first, well, more than two, but two things I'm going to mention. Fucking slow day in Osterley yesterday, wasn't it? 3,000 journos with two articles. The two things I want to mention, though, the first is that apparently various fintech executives have been asking the government for incentives for them to consider a London listing. Apparently these incentives include potential stamp duty holidays on new IPOs or cuts to capital gains tax to help encourage these firms float in Britain. I think pigs will fly before that happens, but nonetheless, at least someone is, banging that drum, and it's not just us once again. Sky also reporting yesterday that President Trump might be visiting the UK in the coming weeks. Before anyone gets excited about this being a potential state visit, that's coming later in the year. This will instead be a potential visit to his two golf courses in Scotland, one in Aberdeen and one at Turnberry. He's likely to be coming either in late July or early August. So, golf in the summer in Scotland. What could be better?
I love it.
Away from Trump and back into the United States, a few bits and bobs from the tech sector to round things off this morning. One for Tom Talks Cars. If he's on the call, I can't actually see him. I don't think he is. He must be still having a lie-in. Well, in any case, while he's comatose somewhere. Nvidia have become the first company to reach a $4 trillion market cap, continuing to perform very, very well indeed. Sticking with the tech sector, Linda Yaccarino has stepped down as the CEO of X. Hopefully whoever, I think I speak for all of us, whoever replaces her, please just get rid of the fucking bots that reply to every single tweet that is sent on this platform.
You also saying that also there's been some people with your beautiful face slipping into my DMs trying to sell me stuff. I'm assuming it's not you.
No, it's not actually. That's a very good point. On a more serious note, I do appear to have a whole flock of imposter accounts out there. So I will not be sliding into your DM saying, pay me 300 quid and I'll teach you how to trade. If anyone does that, it is not me. Please don't fall for the scam.
I was hoping for feet pics, to be honest, but no, there you
go. Look, what we get up to on WhatsApp, mate, that's private.
Move on.
Sticking with the tech sector, Apple, they are apparently going to debut an upgraded version of the Vision Pro headset as soon as 2025. This will apparently have a new chip and a more comfortable strap, which you can view your pictures at your leisure there, Ryan. They are also planning a lighter and redesigned headset model for 2027. Obviously, technology is my strong subject. But I would say that the Vision Pro has been a sort of complete and utter unmitigated disaster and flop since it launched. So Apple clearly trying to turn things around there. Then lastly, a couple of things for the AI sector. Microsoft, they were giving some staff presentations yesterday. They have apparently saved $500 million as a result of AI, and they've done some job cuts as a result of that. They also say that now just over a third, of their new product code is written with the help of AI. So all of those people who were saying a few years ago, oh, you need to learn to code. Well, clearly I don't, because a third of that job's not being done by a human anymore. And lastly, Reuters citing sources saying that OpenAI, they are planning to release a new AI-powered web browser. That is obviously of note for the likes of Alphabet with Google Chrome. And Alphabet shares did see a little bit of downside yesterday. And for the time being, that's all from me.
Absolutely marvellous. Thank you very much, Mr. Michael Brown. So just read off some choice headlines or a bit of an overview from the Overnight News Roundup. As you know by now, courtesy of Zach Eisman. Do follow him on Twitter. Do subscribe to the Overnight News Roundup on Substack, etc., etc. So starting off in trade, and I appreciate Michael did touch on a few of these already, but US-Brazil, as we know, Trump's announced a 50% tariff on Brazilian goods, including copper imports. This, as Michael said, clearly citing the legal action against Bolsonaro. So this is very much a personal vendetta rather than anything to do with deficits or anything like that, by the sounds of it. Regarding the US and EU, the EU is exploring tariff cuts, import quotas and credits to shield its auto industry from US duties. Japan seeks tariff talks during the US Treasury Secretary Bessent's visit next week. Automakers are cut export prices to stay competitive amid Trump's tariffs. India, as Michael said, the Indian delegation is to visit the US for trade talks, aiming for a deal by fall 2025. So autumn for us English people.
I was just about to say, and young Zach needs to do a bit of proofreading there, I think.
US, Singapore, their talks focus on pharmaceutical supply chains amid Trump's trade war. Malaysia, they're apparently optimistic about lowering tariffs before August the 1st deadline. China and the ASEAN, China urges Southeast Asia to maintain openness as Trump's tariffs loom. Finally, on the trade front, Australian beef exports to the US rise despite tariffs. So they're doing all right there. Moving on.
Sorry. I was literally about to say that.
Yes. Yeah, I learned from the best. In macro news, US power providers are seeking price hikes due to data center demand. Manhattan rents hit sky highs. This was, I think, also last week's data was also a new high. So going from high to high. Japan, wholesale inflation slows. JGB's rally, limited tariff impact on exports. No US pressure to strengthen the yen. Foreign investors are buying stocks and power futures trading to rise. That's according to Reuters and Bloomberg. In China, the macro front, property shares surge on revival hopes. Construction machinery sales slump. So a bit of good news, bit of bad news. Go on.
Just on that headline you just said about China and the property sector.
Yeah.
a bit of an odd one, to be
Go
completely
on.
honest with you. Westy and I, and also our China analyst, were doing a bit of digging into this morning.
Go on.
And it seems like this move, which you said, this 11% rally in a Bloomberg gauge of Chinese property stocks, it seems to have come basically on the back of some very sketchy and very unverified reporting on Chinese social media that there might
Ooh.
possibly potentially be a high level government meeting on the property sector next week. Now, this gets a little bit more fishy when you dig into it a little bit further. So Bloomberg flagged in their article that a company called Sino-Ocean Group was up 37% and a company called Logan Group was up by as much as 85%
Oof.
in
Jeez.
trading in Hong Kong. Now, because I have 5 minutes, I thought, well, let me just dig into Logan Group. It turns out that 75% of the outstanding shares in Logan Group were owned by one bloke as
Oh,
of the
hello.
last reporting period.
Red
So
flag. Red
I'm
flag.
not going to, for risk of a lawyer contacting me, I'm not going to say any more than that, but smell a rat.
Yes, no, absolutely. Absolutely. Good bit of knowledge there, Mr. Michael Brown. Where was I? Europe, Dutch pension funds there to sell $150 billion in bonds. German firms are optimistic. I don't know what's going on with the German survey data. They always seem to be very optimistic, but I don't see a reason for them to be. But, who am I to judge? UK Treasury reviews media and fiscal challenges. What else going on in the UK? UK housing demand turns positive. It's pretty much always positive. UK avoids power market split. That's according to the FT and Bloomberg and Wall Street Journal. In Norway, inflation is rising, supporting an easing outlook. South Korea, their central bank held rates amid stable outlook and debt concerns. Some geopolitical news. Taiwan, they have been displaying their US sourced Abrams tanks, with analysts noting drone vulnerabilities apparently, and obviously drones are all the rage now in any kind of conflict. Canada, their business groups are pushing for leadership in military raw materials. Equity news: Amazon is launches 10-minute deliveries in New Delhi. There you go. XAI, obviously we've had a very, very dodgy Grok recently. I'll leave it at that. They're rolling out Grok 4, highlighting rapid AI development. And obviously, as Michael said, the CEO of X has left. I do believe a product manager has also left X, or the XAI. So yeah, I think there's a few people leaving.
I mean, if that was my
TSMC,
fucking
sorry, go
product I was managing, I'd have emigrated, I think.
quite.
After what it's been up to over the last day or
Yeah,
so.
definitely. TSMC, the chip giant, chip maker giant, reports 39% revenue growth driven by AI demand. Nissan, they face high coupon rates on $4 billion worth of bonds amid turnaround efforts. And that's it from me. Back to you in the studio.
Good stuff. Thank you, Ryan. Well, in terms
You're
of
welcome.
today, then, we do have a slightly busier data docket than we have had for most of the week, but that's a very low bar considering that much of the week
Do you
so
know
far
what? You
there's
took
been
the words
nothing
out
at
of my
all on
mouth.
it. So that's really not saying a lot. What do we have then? Well, we do have a bit of a barren European session up ahead, and then as we move into the afternoon, stateside, we get the weekly US jobless claims numbers, of course, at 1:30 this afternoon, London time. Initial claims in the week to the 5th of July seen holding broadly steady at 235,000. Continuing claims in the week to the 28th of June also seen holding broadly steady at 1.965 million. Of course, neither of those prints pertain to the July non-farm payrolls survey week. In terms of other bits and bobs today, as I alluded to earlier on, we do have a 30-year bond auction out of the States at 6 o'clock this evening, $22 billion worth being sold off. And you would expect that to be taken down relatively well after the 10-year sale was smoothly received yesterday. In terms of speakers, we are due to hear from the Fed's Musalem and Daly, the ECB's Cipollone and Vilroy, and BOE Deputy Governor Sarah Breeden. But excuse me, before anyone gets too excited about Sarah Breeden's remarks, she will be speaking on climate change. Now, I think the
Oh,
biggest
boo.
the most most hot air in the city comes out of the Bank of England, so they should
Hey.
be looking in a mirror on that one. And last but by no means least, we do have a couple of notable earnings releases today. Q2 earnings season gets underway properly next Tuesday with the big banks reporting, but nevertheless, before the market opens today, we hear from Delta Airlines, so we'll see whether or not they can take off. And after the market close, we hear from Levi's and WD-40, and I wonder if some positive earnings there could sort of grease the wheels of a rally in WD-40 stock.
I did wonder why. I was like, why the hell is WD-40 getting mentioned? And then it all clicked in. Well played, Mr. Brown. Mr. Brown, I don't say it often enough, but Michael, you are an absolute legend. Thank you so much for being awesome on these shows, as always.
My pleasure.
Nearly as awesome as our listeners, and we really do appreciate you tuning in. Yeah, much love. Keep it tight. Whatever you're doing today, stay safe.
Yeah, I'll come with
and we'll see you all tomorrow. Bye bye.
Cool. Cheers, Ryan. Bye bye.
Bye bye.